Let me ask you a simple question. Have you ever picked a stock that looked perfect only to watch it go nowhere, or worse, move against you? You did your analysis, the chart looked clean, the indicator gave a signal, and yet the trade failed. Here's the uncomfortable truth most beginners don't hear. You're probably not losing because your strategy is bad. You're losing because you're trading the wrong stock. In today's video, I'm going to show you a powerful but rarely taught idea called the group action principle. This single concept can completely change how you choose stocks, how you time trades, and why some traders seem to catch big moves effortlessly while others struggle every day. You see, most beginners trade stocks in isolation. They analyze one chart, they focus on one indicator, they ask this stock going up or down? But professional traders ask a very different question. They ask, is this stock moving its group? Because in the market, stocks don't move alone. Banks move with banks. Tech stocks move with tech stocks. Energy stocks move with energy stocks. And when money flows into the market, it doesn't randomly pick one stock. It flows into groups, sectors, and themes. If you don't understand this, you'll constantly feel like the market is against you. Your stop loss gets hit. Your breakout fails. Your confidence drops and you start blaming yourself or your strategy or the market. But what if the real issue isn't how you trading? What if it's you're trading? In this video, I'll break down the group action principle in a beginner-friendly step-by-step way. No complicated jargon, no confusing theories. Just clear logic that actually makes sense when you look at the charts. You'll learn why some stocks explode while others stay stuck, why your perfect setup often fails, and how to instantly improve your trade selection without adding more indicators. This is the same idea used by professional traders, fund managers, and smart money participants. And once you see it, you can't unsee it. So if you've ever said, why did that stock move but mine didn't? Why am I always early or late? Why does the market feel random? Then this video is for you. By the end, you'll understand why trading the right stock matters more than timing the entry, and how aligning with group action can dramatically stack the odds in your favor. Let's get started, and I promise this will change the way you look at the market forever. Now let's talk about the real struggle most beginner traders face and why it feels so frustrating. You study charts every day, you watch YouTube videos, you learn patterns like breakouts, support and resistance, moving averages, RSI, MACD, all of it. And on paper, everything makes sense. But when it's time to trade it, the market doesn't behave the way you expect. You buy a breakout, price reverses. You sell at resistance, it breaks through. You follow your rules and still lose money. So you start asking yourself, am I bad at trading? Is this strategy even real? Why does this work for others but not for me? Here's the hard truth most beginners don't realize early enough. Your analysis can be 100% correct and you can still lose the trade. Why? Because you're focusing on the wrong level of the market. Most beginners make the same mistake. They zoom in too much. They look at one stock, one time frame, one indicator, and they completely ignore the bigger picture. Let me give you a common example. You find a stock that looks bullish. It's breaking above resistance. Volume looks decent. Your indicator gives a buy signal, so you enter the trade. But what you didn't check is the sector strong? Are other stocks in the same group moving up? Is money flowing into this area of the market? If the answer is no, then your trade is already weak before you even enter. This is why beginners often feel like the market targets their stop loss. Every good setup fails. Trading feels random and unfair. But the market isn't random. It's organized around money flow. Big institutions don't trade one stock at a time. They move capital into groups of stocks, entire sectors, industries, or themes. And when money flows into a group, strong stocks get stronger breakouts, follow through trends last longer. But when a stock is moving alone without its group, breakouts, failed trends die quickly, you get chopped up. Another painful mistake beginners make is forcing trades. You scroll through charts looking for anything that moves. You convince yourself a setup is good enough. You trade because you don't want to miss out, but what's really happening is this: you're trading isolated stocks in a market that rewards collective movement. This is why you often see one tech stock breaking out, but the rest of tech is weak, one bank stock going up, while banking stocks are falling, one stock giving signals, while the index is flat or bearish. And then you wonder why the trade doesn't work. The pain point is not lack of effort, it's not lack of discipline, it's not even lack of strategy. The real problem is stock selection without context. You're trading against the current instead of with it. And until you understand this, you'll keep changing indicators, hopping strategies, and second guessing every trade. The good news, this problem is completely fixable. And in the next section, I'll explain exactly what the group action principle is, how it works, and why it instantly puts you on the same side as smart money without making trading complicated. Alright, now we get to the heart of the matter, the group action principle. This is the concept that separates traders who consistently catch big moves from those who feel like the market is a lottery. And the best part, it's simple once you break it down. Here's the basic idea: stocks move in groups. The stronger the group, the more likely individual stocks in that group will move in the same direction. Think of the stock market like a river. A single water molecule may try to move upstream, but it gets dragged by the main flow. If you trade a stock that is alone or against its group, you're trying to swim upstream. If you trade with the group, you're moving with the current, and it takes far less effort to get results. Step 1, identify the group. A group can be a sector, tech, banks, energy, and industry within a sector, semiconductors, regional banks, oil and gas as thematic trends, AI stocks, EV stocks, renewable energy. The key is that money flows into groups, not just single stocks. Institutions, hedge funds, and smart money don't buy one company at a time. They target sectors where there's momentum. Step 2, they measure group strength. Once you know the group, you check if it's strong. Some simple ways to do this: index or sector ETF, look at the ETF representing the sector. If it's trending up, the group is strong. Relative performance, compare stocks in the sector. If most are outperforming the market, the group is healthy. Volume and momentum, big moves with strong volume in multiple group stocks indicate serious money flow. If the group is weak, no matter how perfect a single stock setup looks, your odds of success drop dramatically. Step 3, trade with the strongest stocks in the strongest groups. This is where the magic happens. Instead of trading random stocks with nice patterns, you trade the leaders of the strongest groups. Leaders are typically stocks making new highs while their group is rising stocks with above average volume, stocks that consistently outperform their peers. When you align yourself with strong stock plus strong group, you're essentially riding the wave that institutions are creating. Your trades have a much higher probability of success. Step 4, avoid lone wolves. A lone wolf stock is one that looks good on its chart but is moving against its group. It may have a temporary breakout, but it usually fails. Trend reversals happen faster and stops get hit more often. By applying the group action principle, you filter out these high risk setups and focus only on trades with real momentum. Step 5, timing is still important, but context is everything. Even with a strong group, entering at the wrong time reduces your edge. But when your stock is in a strong group, the market context works in your favor. Breakouts are more reliable, pullbacks are shallower, and trends last longer. To summarize the principle in one sentence, trade the strongest stocks in the strongest groups and avoid stocks that move alone. This is what professional traders do every single day. It doesn't require complicated indicators, fancy algorithms, or insider knowledge. It just requires observing the market the way it actually behaves. By understanding this principle, you start to see why some trades fail, why some setups feel perfect, but still lose, and how to drastically improve your trade selection. Now that we've covered the theory, let's bring the group action principle to life with a real example. This is where everything clicks. I'll keep it simple so you can see exactly how to apply it in your trading. Step 1. Pick a sector and let's say we're looking at the technology sector. Why tech is usually volatile and group movements are easier to spot. We check the tech ETF like QQQ to see the overall trend. If QQQ is trending up with strong volume, that tells us the tech group is strong. If it's flat or declining, the sector is weak and individual stocks are more likely to fail. In our example, let's say QQQ is trending strongly higher with big daily candles and above average volume. That's our first green light. Step 2 now, identify the leaders. Next, we look at individual tech stocks. Examples could be Apple's PL, Nvidia's NVDAV, or Microsoft MSFT. We're not looking at every tech stock, just the ones outperforming their peers. Apple is breaking out to a new high. Nvidia is above its moving averages with rising volume. Microsoft is slightly lagging, consolidating. Here's what we notice. Apple and Nvidia are moving with the group while Microsoft is lagging. Step 3, they analyze group alignment. No, we compare Apple, breakout with strong sector alignment. Nvidia, breakout with strong sector alignment. Microsoft, breakout but sector alignment weak, even though all three have a bullish chart. Apple and Nvidia have the advantage because their moves are supported by the group. Microsoft's move might fail because the group isn't fully supporting it. Step 40, apply practical rules. Here's how we would trade using the group action principle. Only enter trades in stocks aligned with a strong group. Prefer leaders, not laggards. Leaders are usually the first to move and momentum carries them further. Watch volume. Strong moves with increasing volume confirm that money is flowing into the group. In this example, you could enter Apple on a breakout above a recent resistance candle, setting your stop just below the breakout point. Nvidia could be a second opportunity if it confirms a pullback within the strong trend. Microsoft. Skip it until the group strengthens because the odds of failure are higher. Step 5, a visual takeaway. If you were looking at a chart, you'd see the group ETF trending up, leaders making new highs in sync with the group, laggards moving alone or struggling to catch up. This simple visual check instantly improves your trade selection. You don't need dozens of indicators. You don't need complicated algorithms. You just need group alignment and strong stock selection. Step 60. Result: by applying the group action principle, you enter trades with a higher probability of success. Breakouts are more reliable, pullbacks are shallower, trends last longer. It's like finally turning on the lights in a dark room. You start to see the trades that actually matter instead of chasing random price action. This example shows that trading isn't just about technical patterns, it's about context. And the context is often the group behind the stock. Now that you've seen the theory and a practical example, let's summarize the most important lessons from the group action principle. These are actionable points you can start using in your trading immediately. 1. Always trade stocks aligned with strong groups. The first and most important rule: don't trade in isolation. Check the sector or industry trend before entering any trade. Use ETFs or sector indexes as a quick gauge. If the group is weak, even a perfect stock setup can fail. Tip: make it a habit to glance at the sector chart every time you plan a trade. This is your early filter to avoid high risk setups. 2. Focus on leaders, not laggards. Within a strong group, not all stocks perform equally. Leaders are stocks making new highs with strong volume. Laggards are underperforming their peers and often give false signals. TP: rank stocks by relative performance. Trade the top performers in strong groups. This increases your chances of catching sustained trends. 3. Volume confirms. Money flow. A stock moving with its group is one thing. A stock moving with volume support is confirmation that money is actually behind it. Rising price with low volume, be cautious, it could fail. Rising price with high volume, strong likelihood of continuation. Tip: always check the volume relative to the stock's recent average. Look for spikes that indicate smart money participation. Bonus tip: avoid lone wolf trades. A common beginner mistake is trading stocks that look good technically but move against their group. These trades often get stopped out or reversed quickly. Aligning with group action reduces stress, increases consistency, and saves money. Tip: think of the market like a river. Swim with the current, don't fight it. Putting it all together, here's a simple routine you can use daily. Scan sector ETFs to see which groups are strong. Identify the top performing stocks in that group. Check volume and price action to confirm momentum. Enter trades only when the group is supportive. By following this approach, your trades are more reliable. You spend less time chasing setups that fail. You start trading like a professional, not a random guesser. The group action principle doesn't require complicated indicators or expensive software. It's about understanding the flow of money in the market and aligning yourself with it. Once you internalize this, you'll notice a huge difference. Your breakouts hold, trends last longer, and trading starts to feel much more predictable. All right, we've covered the theory, the practical example, and the actionable tips. Now it's time to put this into practice, and I want you to take one important step after watching this video. First, remember this: trading the right stock matters more than timing the entry. Align yourself with strong groups, focus on leaders, confirm volume, and avoid lone wolves. This mindset alone will put you miles ahead of most beginners who chase setups blindly. Here's what I want you to do next. Review your watch list. Take a few minutes today to check which stocks belong to strong sectors. Rank them by performance relative to their peers. Notice which ones are moving with their group and which ones are going solo. Apply the group action principle in one trade this week. Pick just one trade using the principles we covered: strong group, leader stock, volume confirmation. Keep your position small, follow your risk rules, and observe the difference in trade quality. Journal what you notice, track how trades in strong groups behave versus trades in weak groups. You'll start seeing patterns that most beginners miss. This will dramatically improve your confidence and results. Why you should take action now. The biggest mistake traders make is watching videos without applying them. Information alone doesn't change results. Action does. When you start trading with group alignment, your breakouts are more reliable, your trends last longer, your stress decreases, your account growth becomes consistent. Think about it. Small changes in stock selection can have a massive impact on your results. You don't need to change your entire strategy, indicators, or time frame. Just trade the right stock in the right group, and the rest starts falling into place. Final motivation: remember, trading is a game of probabilities. You can never control the market, but you can control the odds in your favor. The group action principle is one of the easiest ways to tip the odds towards success. If you apply this, your trades start to make sense, your setups hold, and you finally feel like you're in sync with the market instead of constantly fighting it. Next step: if you found this video valuable, do these 3 things. Like this video to support more trading education content, subscribe, and hit the notification bell so you never miss practical trading strategies. Comment below which group or stock you're going to watch this week using the group action principle. Take action today. Align with the flow of money and watch how your trading changes. The market rewards preparation, patience, and alignment. So start trading with the group, not against it. This wraps up our video on the group action principle. Apply it, observe the difference, and you'll see why professionals emphasize group alignment more than any single indicator. Your journey to smarter stock selection starts now.